NVIDIA earnings are just 2 days away and the stock is sitting at one of the most important technical levels on the entire chart. Right now, NVIDIA is around $209, but I'm seeing a bearish setup that could send this stock straight towards $200, and if that level breaks, the downside could get much bigger. But here's what's crazy, the bullish setup I've been tracking is still alive, and if earnings flip this chart back bullish, NVIDIA could still be setting up for a move towards $260. So today, I'm going to show you the exact levels that decide whether NVIDIA breaks down or explodes higher after earnings. And before we go over the top-down analysis, I want to go over this winning trade I gave you guys on the last NVIDIA episode, which was on the 4-hour time frame. I was seeing this double bottom here with the entry at around $205 or so, with the measure move taking us to about $214. And as you can see, not only did we hit the exact measured move, but eventually we went up as high as $227.92. So congratulations on whoever took this setup. This is a big win for the flex candle community. Now let's start off here with the monthly chart. Right now the price of NVIDIA is at $209.76, and the last episode we did was in July. June we had a red candle. I was talking about this could be possible tweezers or tops and we could roll over. We did do that in July. Even though we had a green candle, we went as low as $190. Now for August we're getting another green candle and we went up this time as high as $227. The low was $196. We still have about 7 days before this candle closes. The only thing that I'm not liking is a lot of wickage here. This means that we really cannot get above $236, $237. That's going to be major resistance. If we could break through that, that's where we could start seeing higher prices of $240, $260 and higher. Now the 21 moving average is not too bad. It's at $169.45. We're not too far away. We're technically flagging out here sideways. The only thing is that we do have some bearish divergence on the stochastics RSI. We are rolling over, so I could possibly see us going sideways here, waiting for the 21 moving average to catch up to price, and then from there possibly going up higher. Now on the weekly time frame, we see that the stochastics here were on the way up, and I'm starting to see some curvature like we want to roll over. These last 2 weeks have been red, and last time I was talking about this being a possible falling wedge, and as you can see, we actually broke out. This falling wedge takes us to about $260. Again, we made it to about $227, so this is actually technically a winning trade so far because we made about half of the measured move. Now we're kind of retracing, so if you guys took profits on this, congratulations on whoever did that. Now something that I'm seeing that's a little bit bearish, since the stochastics RSI are rolling over, is that this could be potentially something called cat ears, where this is one ear, this is the head, and then this is the second ear, and this is a bearish pattern that could bring us down to about this 100 moving average, which is at $166. Now let's see if that ends up happening. With the falling wedge is still technically winning at the moment. I'm still going to go with that as long as we can stay above this 21 moving average. If we lose the 21 moving average and we lose that 50 moving average, then those cat ears might be in play. Now we head over to the 3-day chart. Again, this is looking a little bit bearish. Stochastics are toppy. We're rolling over. The RSI is rolling over. We got to see if we can stay above this 50 line here on the RSI, and we're still holding above the 21 moving average, so that's giving us some leeway here. But if we lose this, we could fall down to this 50 moving average, and that's basically at $200. So certain things are still showing us that we could get some type of a pullback. On the daily time frame, stochastics have come down, but we still need more time here to reset before we could push up. The RSI is losing the 50 here. We just lost the 21 moving average. We're trying to hold the 50 moving average as support. That's at $207. If we lose this, you see this gap here in the VRVP, we could fall down to this node that's basically at $201. So another signal that's showing that we could possibly fall down to about $200. On the 4-hour time frame, stochastics are low. We're dragging here a little bit. We lost the 21, we lost the 50, and we're holding the 80 moving average as support. We must hold on to this 200 moving average at $207. We lose this, then we could fall down. Again, look at this gap in the VRVP. We could fall down to this node that's around $203, $200, and if we fall all the way down here, that's $197. And on the 1-hour time frame, we lost all the moving averages. We see here that we have a rounded top. Those are usually bearish, and right now we're creating a bear flag here, and the measure move to this bear flag coincidentally takes us to about $200 as well. So this is why I'm calling a move to possibly $200. Now earnings is on Wednesday, 2 days from now, so it's possible that we fall to $200 by earnings, and then if earnings are good, maybe we start going up. Maybe we could get up to the $237 resistance. Maybe we could break through that. We continue to be bullish, and then maybe finish off that falling wedge measured move on the weekly to $260 eventually. But right now, short term, I'm kind of feeling a little bit bearish, at least for a pullback to $200, and then we'll see if earnings gives us the catalyst to explode up higher from there. All right guys, so that's the break. breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.